Hi, Phil from philhogan.com. Today we're going to talk about the 10 most common questions I get regarding cross-border tax and financial planning matters. Okay, let's get started. So question number one, as a US citizen living in Canada, am I required to file US tax returns? So yes, so as a US citizen living in Canada or really anywhere in the world, as long as you have your citizenship, you're required to file US tax returns, assuming of course you're over the annual filing threshold of about $10,000. So you'll file US tax returns and then all the forms that come along with actually filing US tax returns as a US citizen. Question number two, what is an FBAR? Many people have heard the term FBAR. So FBAR stands for Foreign Bank Account Reporting, also known as Form 114. So essentially, anytime a US citizen holds an aggregate amount over $10,000 of non-US foreign financial accounts, are required to file Form 114 or an FBAR. So the way you calculate that is essentially you add up the highest balance of all your foreign financial accounts and if in any year, and if that balance exceeds $10,000, then you're required to file an FBAR form or Form 114. There's also additional forms that get filed within the tax return related to these foreign financial accounts, but the FBAR form essentially gets sent to the Treasury Department separate with that $10,000 filing threshold. So that's what an FBAR form is. How do I report my US assets? So we talked about FBAR from a perspective of US taxation, very briefly. But from a Canadian taxation perspective, we have a form very similar, Form 1135, Form T1135, that reports non-Canadian financial accounts to the Canadian government. The threshold for this form is much higher than the FBAR threshold. The T1135 threshold is $100,000, and that's $100,000 of cost. So if the cost of your foreign financial accounts outside of Canada exceeds $100,000, then you have to file Form 1135. There's a really high penalty on that form if not completed correctly or on time, of $25 a day to a maximum of $2,500. And that would also include assets that are in Canadian brokerage accounts that might be US securities. So if you have Apple stock, Google stock, let's say, in a Canadian brokerage account, and your cost in those assets is over $100,000, then you'll be required to file Form 1135. Okay, so question number 4. What is the Canadian tax filing deadline? So I'm going to talk from a perspective of US citizens filing in Canada. The Canadian deadline for tax filing, not considering last year's extensions because of COVID. Most people have an April 30th tax filing deadline. For those that are self-employed, we have an extension to June 15th. You still need to pay amounts to ensure you're not paying any interest on taxes owed at April 30th. So regular taxpayers, April 30th. Self-employed individuals get to June 15th. Question number 5, what is the U.S. tax filing deadline? So U.S. tax filing deadline for those Americans living in Canada is automatically, in most cases, June 15th. So your Canadian return, let's say in most cases, if you're not self-employed, are going to be due April 30th. Your U.S. return will be due June 15th. You have the ability to actually further extend the U.S. return from June 15th all the way to October 15th, and in some cases, actually to December 15th. But in most cases, if you can help it, you want to get your taxes done by April 30th, get both the Canadian and US tax return in before that date. Technically, the traditional filing deadline for US purposes is April 15th. So if you're not a Canadian resident and you're not outside of the US at that date, your filing deadline will be April 15th for US purposes, but you could further extend that with an extension form. Okay, question number 6. Can I own Canadian mutual funds as a US citizen in Canada? So technically, yes, you can own Canadian mutual funds as a US citizen living in Canada. The reason it's problematic is because of the PFIC reporting. So essentially, not to get too deep into this, but for those that own passive foreign investment companies, which Canadian mutual funds will be considered passive foreign investment vehicles, there's additional forms on the Canadian or on the U.S. tax return that need to be filed. So Form 8621 is a form that needs to be filed in addition to a plethora of other tax rules that come into play for Canadian mutual funds, or just PFICs in general. And for those that are thinking of purchasing mutual funds, probably the best bet is to find somebody that can actually help with a mutual fund company that offers what they call QEF elections. And we're not going to get into this in this video, but just know it is possible to own Canadian mutual funds as long as you have specific elections that are made that make it easier to actually complete the US tax return. So just to kind of recap, yes, it is possible. The compliance can be quite heavy if not planned for properly, but it is possible. Okay, question number 7. Can I transfer my US retirement accounts to Canada? So yes, you can transfer your US retirement accounts to Canada. So let's talk about these in specific buckets. So you might have accounts such as IRAs, such as Roth IRAs, such as 401ks. And in most cases, sometimes these accounts can stay in the U.S. In a lot of cases, it makes sense to consolidate them into your Canadian holdings. If you have specifically a cross-border advisor in Canada that can hold IRAs and Roths and 401ks, so that's always a good idea. That way you don't have to necessarily worry about an advisor in the U.S. not taking into consideration Canadian compliance rules, foreign currency calculations, or just Canadian tax law in general. So those can get moved. The only account that might require a little bit of work from a tax perspective would be the Roth IRA. So as you move a Roth IRA across the border, or specifically when you become a resident of Canada, you have to do certain elections with Revenue Canada to ensure the Roth IRA remains tax-free and deferred from tax from a Canadian perspective. So those would be the registered accounts. And then if you're talking about a regular investment account that's situated in the US, those accounts specifically would make a lot of sense to move to Canada. And mainly for the reasons, we spoke about T1135 reporting earlier. For US assets that are held in the US, the T1135 reporting is much more significant than if they're held in a Canadian brokerage account. So once again, not to get too deep into this today, but for US investments in the US, you would need to report individual securities on that T1135 form for that specific account, compared to if you were actually going to hold those investments in Canada, you would only complete the 1135 based on where the assets are held and in which country. So you might have just all US accounts, or all US securities reported on one line if they're held in Canada, versus if they're held in the US, you would have to report them individually on that T1135 form. Not only that, you have to report the highest cost and the cost at year end, which is very difficult to do. Most of the brokers don't even have this information available. So long story short, if you can move your non-registered investment accounts from the US to Canada, that'll simplify your reporting quite a bit, and it consolidates everything in Canada. And you really want to focus on tax planning from a very Canadian-centric position anyways. Okay, so question number 8. What if I'm a U.S. citizen living in Canada and have not filed U.S. tax returns? So we run into this a lot. So whether you're an accidental American or you just haven't filed U.S. taxes in Canada for many years, there's a program available called the Streamline Tax Filing Program administered by the IRS. And you do have to qualify for the program, but if you qualify and you're eligible, you essentially need to file 3 years of tax returns and 6 years of the FBAR forms that we talked about earlier. And if you qualify under that program and you file the 6 years of FBARs and the 3 years of tax returns, then you're essentially caught up regardless of how many years you might not have filed US tax returns for. Once again, we're not going to get into the details of that program because that's a pretty lengthy conversation. We're a little bit worried that program is going away. So for anybody that's thinking of catching up, that might be a good option for you, because if we go back a couple of years, we go back many years, maybe 10 years ago, we had programs that were administered by the Criminal Investigation Unit at the IRS, the Offshore Voluntary Disclosure Program, and the Offshore Voluntary Disclosure Initiative that were quite punitive and didn't work certainly as well as the Streamline program. So yeah, so if you're looking to catch up on your U.S. tax return, that Streamline program would be something you want to look into. Okay, question number 9. Is my U.S. stimulus payments taxable in Canada? So we know, in 2020, we had a batch of stimulus payments go out in the fall, and now we have a new batch of stimulus payments that will be coming out in the coming months if you haven't received yours yet. And then the short answer here is the stimulus payments are not taxable in Canada and they're not taxable in the US. So they won't be taxable in either Canada or the US. Okay, so final question number 10. Can I file jointly in Canada with my spouse? So we get this question a lot. So we talk to a lot of clients that are moving to Canada, and that they've been in, let's say they've moved down to Canada many years ago, or they're new Canadians moving up, and they're used to filing jointly with their spouses in the US. So we really don't have a joint filing mechanism in Canada. We file separate returns, although there is some interplay between both of the returns. And in some cases we have the ability to split income, mainly from pension income. So you might have pension income that you're able to split with your spouse, but simply speaking, we really do have we have separate filed tax returns on the Canadian side. So for most Americans that are moving to Canada that are married, what you'll find is you'll have one joint US return and maybe an FBAR filing for both spouses. And then you'll have two separate Canadian returns to file while a Canadian resident. Yeah, so those are the top 10 questions we get from clients regarding cross-border tax and financial planning matters. Hopefully that was helpful. Thanks for watching the video. If you found this information helpful, please make sure to click the like button below. And if you don't want to miss any future videos, make sure to click the subscription button below and the alert button to be notified immediately once a new video is posted. Thanks again for watching, and we'll see you on the next one.